Let's talk about City Union Bank. The board has approved a 500 crore fundraise via the QIP route. Let's talk about more of this and also how they see business for the remainder of this year. We're joined by Mr. Kamakodi, the Managing Director and CEO at City Union Bank. Hi, Mr. Kamakodi. Good morning and good to have you on the show, sir. Give us a couple of details. This QIP, it's an enabling resolution. Could you tell us, why you looking to raise this money and by when should we should see this money being raised?
It's only an enabling resolution, and we used to have this as the part of our annual shareholders meeting to get the shareholders approval and get that approval in place, if at all it is required. We don't have any immediate plans on hand to go for capital raising at this point of time. In fact, we have been having this as the part of shareholders approval for the past maybe about 14-15 years. And we used it only once, and we are having a Tier 1 capital adequacy ratio itself in the excess of 20%. So we use it if at all we get any, opportunity or the offer which we cannot refuse. So at that point of time, this will be in handy. So as per the regulations, if we get shareholders approval once for QIP, it is valid for 1 year. Okay. So every year we get this approval from the shareholders, and we use it only when it is absolutely necessary.
So as of now, it's just an enabling resolution. You may or may not raise this money, right?
Exactly.
Got it. All right. Let's talk about business then. How's business shaping up? I think you were guiding for around mid-teens loan growth, credit growth for this year. Do you stick to that? And now you've got a bit of a booster shot coming in with that CRR cut. How does it change things? Do you get a little bit more optimistic? And also in terms of NIMs, I think for the last year, you clocked around 3.5, 3.5, 3.6% or thereabouts. Given that you have a couple of repo rate cuts as well, how do you see this pan out in terms of the yields coming in a little bit lower? And in turn, what does it mean on the NIMs front?
See, actually, we are continuing with our past guidance of mid-teens, whatever we communicated to the market. We hope we'll be able to, achieve that figure, and probably, if possible, a percentage point more or from the points which we guided. We are trying to work on that, and it is going as per our expected planning. Because of the rate cut, as you know, when we get into the increasing interest rate scenarios, the asset gets repriced quickly. Liabilities take a little bit longer time, and you have expansionary margin. But at the same time, when you get into the decreasing interest rate scenario, some sort of the assets gets repriced quickly, and liabilities once again take a longer time. So there used to be a little bit contraction in the margin. But this time, we expect a similar behavior. But the good part is that since it has come in a single shot, even though there could be issues maybe for a quarter or so, year as a whole, we expect whatever net interest margin we achieved in the past and we guided, we hope we should be able to achieve those figures as we for the year as a whole, even though there could be 1 or 3 to 4 months of contraction. But since it has come in one shot, I hope we will be able to, year as a whole, we will be able to maintain whatever we have achieved in the past.
Just in the near term, sir, Q1, Q2, when there will be NIM compression, what could the NIMs drop to?
As we had already guided in our conference call after the, March quarter results, what we had about, 3.5 to 3.6 percentage in NIM. We should be able to have maybe about 10 plus or minus 10 basis point to start with. We had already taken certain steps, for example, one of the major steps was that on a gold loan, which constitute about 25% of our book in the last year itself, we converted that as the fixed rate product and not a floating rate product. These things help us to moderate the shock, and also the rate, the deposit rates are also getting repriced quickly, which will help us to have having that passed on quickly. So we hope maybe about 5 to 10 basis point this way or that way.
Not significant. So then about gold loans, you said it's about 25% of your portfolio right now. Yes. What percentage of that would come in the small loans category, sub 2.5 lakh, for which the RBI has eased norms, where you can lend up to 85% of the value?
Almost 75 percentage of our gold loan book are coming less than this about 60 to 70 percentage coming below this less than 2.5 lakhs bracket. But at the same time, we don't have any immediate plans to increase the LTV to 85 percentage at this point of time because like say there are multiple concerns are raised about how the gold price can move forward and all. We are continuing with our existing LTV. We will take appropriate call as the time progresses.
All right, Mr. Kamakodi, final question before we let you go. You've been talking about your unsecured book, growing that. But from an industry perspective, do you believe that the worst in terms of pain in that segment, is it behind? If you could give us your analysis on that, I think you want to grow to around 5% of your book. You could give us a number or there. And also, one point that the street always looks at with regard to your bank is what is the targeted ROA? Could you tell us where do you see that number headed?
See, basically on the unsecured book, when we said 5%, it is on 3 to 5 years of, time schedule. We are very slow and measured, in particularly when we are increasing our unsecured book. And whatever book we have built in the last year or so, it's holding well and we don't have any issues. And we are not rushing anything, particularly on the unsecured front. So we had, achieved an ROA of 1.5 percentage book, and we hope for the current year also we should be having our ROA in around the same range as we have already demonstrated, maybe plus or minus 5 to 10 basis points.
Okay. Thank you very much, sir, for joining in. Moving on.